traders, welcome out to your market roundup. It's February 24th. Corey here with you. We're always going to take you through meaningful news in the markets. We're going to talk about what's heating up, what's cooling off, and ultimately highlight our very best ideas list.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was kind of interesting in that it's a continuation of the sell-off that started at the end of last week. And why does this matter? Well, it could be a false breakout, and there's an old saying, from false moves come fast moves. So let's take a look. Dow flat, S&P down 0.5%, NASDAQ down 1.2, Russell down 0.7%. Oil and gold, commodity space, decent. But again, this false breakout is the key technical occurrence. When you break out to new all-time highs, things should accelerate, not deteriorate. Trump announced that tariffs on Canada and Mexico are to move forward. Advanced decline line, we had 60% of stocks falling today, and a 50-period moving average is at equilibrium. Half of stocks above, half of stocks below, which really tells the story, which is that we really haven't gone anywhere for quite some time. So as momentum traders, this is difficult, and it's really difficult when you have a false breakout. So the S&P was in sort of a flag pattern, and we broke out. Everything looks good. You want to get bullish on that type of occurrence, and the big reversal. We are well below the breakout point, and now we've plunged below the 50-period moving average. Now, does this mean that we're in a runaway bear market? No, of course not, but it brings us right back to the range. And the bigger concern for me, the reason that saying from false move comes fast move, what does that saying mean? Well, it basically means that this is a bull trap, that this sucked buyers in. As you broke out to new all-time highs, people expected an acceleration, and they geared up for that, and the short sellers covered, and the long traders bought in. And just as they got very optimistic, the market has since started to collapse on them. And so all of these recent buyers are now trapped, and they're being liquidated. And then as the selling occurs, more people sell, and it further fuels the downside move. So I'm not suggesting we're going to crash or anything like that, but basically I would go back to that idea that we're in a neutral market with vulnerability more lower than higher. I think if you were to say that there's a big move coming, I would anticipate that that means we're going lower. I think the probability of us sustaining this upward trend has taken a big hit. Here's another chart that demonstrates that. We've been consolidating. Looks like we're breaking out. Oh, whoops. Gave it all back and then some. And even more to the point, we're now below the uptrend line. We're below the lower end of this range. And so not only did we not hold the upside breakout, we're now in a full-fledged downward breakdown on increased volume. Notice how the upside move never really got the volume, and yet the downside move is. It's more to be trusted and not a great sign for upside. Russell 2000, this was a little bit of a canary in the coal mine. It really never broke out to the upside. It remained in its range even as the S&P and the NASDAQ tried. And notice now on the cusp, just on the precipice potentially of making new multi-month lows. So underneath the surface, the market looks actually worse than what one would think that it would, could, should look on, on the recent. We were at new all-time highs just a couple of days ago. Oh, how quickly things can turn and risk happens fast. Some green in healthcare, a lot of green in Berkshire Hathaway. That stock was a rocket ship to the upside. Nike was very strong. On the downside, the biggest and most most important performers: Nvidia, Broadcom, Meta, Amazon, Tesla. There's a lot of red in the bigger market cap names, and that was a problem for the markets as a whole. So let's highlight some bulls, some bears. On the bullish side, I'm going to start with that Berkshire Hathaway breakout. So this is what a breakout is supposed to look like on volume. Now, Berkshire's not a super fast mover, but I would anticipate any back and fill should be bought up. I would anticipate that this is one that is making new highs, new fresh breakout, and expect higher prices, not lower prices anytime soon. If you look at the gold mining stocks, they look very interesting. Gold itself is making new 52-week highs, and the fundamentals on gold miners is pretty simple. They have costs to pull gold out of the ground. It's pretty well, they've got that pretty well down to a number. Let's say that Barrick Gold pulls the gold out of the ground at $1,400 an ounce in cost. Well, with gold hitting new all-time highs, it doesn't take a rocket scientist to say, well, if gold's up, it's not quite at 3,000, but right about there. If it's up near 3,000 an ounce, and your cost to pull it out of the ground is 1,400, that means bigger profit margins for every ounce of gold that you're pulling out of the ground, right? If gold prices go down, well, the profit margin would be lower, but right now that is not the case. So Barrick Gold, symbol GOLD, I think is attractive potentially on these pullbacks as a bull pullback rally opportunity. Once again, notice bigger volume on the way up, lighter volume on the pullback. Let's look at some bearish candidates. Caterpillar, new multi-month lows, breaking levels of support back here. Anticipate lower prices in CAT. And Skyworks, huge gap down. And the most damning thing about this chart is even with an enormous gap down, you're not even able to muster enough strength to get up above this gap zone. That is not great, and I would anticipate a push below that gap low at 62 in the near future. So if it's stable, it probably trades to the lower end of the range and holds around 62. If it's unstable, it probably goes even below that, and I would bet that it's probably going to go below that is how it looks. Markets could possibly really accelerate lower. So you'd have to grade the market as more of a neutral, but it just, when you have those false moves, those false breakouts, they can quickly accelerate in the other direction. It's already started a bit. The last couple of days have been ugly for the markets. We got core PCE on Friday. That's a Fed inflation gauge that they watch closely. Salesforce, Dell, Home Depot, Nvidia, Snowflake, to name a few, reporting earnings this week. Have a great rest of your week, and we will see you next time.